Julia Cordova, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group event contracts to trade E-mini, S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, and copper. Today we have a great show for you. I am so lucky to have Brynne Kelly. She is an energy trader. She is an awesome person, and I'm going to get her take on oil and natural gas. Today's broadcast is brought to you by Tradeovate, which built a custom app dedicated to trading CME Group event contracts. That's what we're all using at Place Your Trades. We're going to give away a trip to Las Vegas. One winner will join the PYT team at the Money Show on April 24th to 26th. All you have to do is go to placeyourtrades.com/Vegas. Go there right now. The thing is like in a day. Then you sign up before March 1st. On March 1st, which I believe is Wednesday at 4 p.m. Eastern time, we will have a special show for you and we will spin the wheel to see who wins the trip to Las Vegas. With that said, let me just jump right in. Hi, Brynne.
Hello.
Thank you so much for joining me. I have so many people that when I said that I was going to interview you, people were so excited to hear what you have to say. People have so much respect for you. When I first joined Twitter, people saw that I was brave enough to tweet about natural gas. Everybody said, oh, you got to follow Brynne Kelly. Brynne is the natural gas, expert. And I did, and I'm not sad about it. You are fantastic.
Thank you. I mean, sometimes there was a huge period of time where I had a lot to get off my chest about natural gas.
I mean, it's my best friend and it's my worst enemy. It has been both at times.
Yeah. It's so misunderstood in a lot of ways. It's a difficult curve to get your mind around because it's really two seasons. So yeah, there's a lot going on.
Before we get into all that though, what first of all got you interested in trading energy? I know you focus on oil and natural gas, but what sort of clicked in your mind that said, hey, this is what I'm going to focus my time and attention on?
Well, I mean, it goes all the way back to the beginning of my career when I ended up at Koch Industries, and obviously that's in the energy world, and that's where I stayed in energy. That's kind of where I really cut my teeth. I've done, I feel like, every job in the energy industry, like on the trade side of it, middle office, back office, system development, software, portfolio manager, trading, scheduling, P&L. And it makes a good kind of, I guess, combination now for doing research and some market analysis, like being able to look at the market and look at the news and maybe put something together.
Gotcha. So the transitioning then right into that, I went long natty a little bit ago, a little early, but like any degenerate, I added, luckily close to the bottom. And then I took off some today, but I heard some rumors that people are saying that the bottom is in.
So that'd be great if you could just find that out from a rumor. That's how it worked. All right. So let's look a little big picture here. We now finally have the March contract off the board. And in natural gas, it has two seasons. It's November to March, which is the winter strip, and then April to October. And typically you're buying for storage over the summer because you have too much, and you're pulling it out of storage in the winter. And whatever price level that clears at, that's for all the price level traders. But what's the most interesting part is looking at the structure of the winter curve versus the summer curve. And in the winter, you kind of tend to be in backwardation, and you can even think about spreads like March, April. And that's a big sort of bull bear proxy, up until the season, for people that don't want to just go outright long or short, they express it through that spread. But inevitably, it disappoints. And it disappoints because March is the last winter contract, and all the storage anybody who was holding anything, it's like year-end winter clearance to make room for the spring new fashion line. Right. So every single year, March inventory is it's old. It's end of winter. It has to be cleared out. You can't hold it over, on any people who have commercial storage contracts. You have to get it all out in March. And then they change the direction of flow. And instead of pulling out of storage, you have to go in. And so March always gets a little bit sloppy because, there isn't anybody looking, they're shoring up, and winding down. Of course, some cold weather or something like that is certainly going to have an impact on flat price. But, there's only 4 weeks, 5 weeks left in the storage season. So, there's nothing really that interesting anymore. Like, that story is behind us. But now we move, the April contract is on the board.
Yes.
And the big thing, sort of a trend, or people know that this is now the time that utilities and storage buyers will start ratably buying over the summer to store it for next season. And so we tend to hit a bottom sometime around here in the spring, as all of a sudden there's a storage bid that comes back in the market.
Yeah, and I'm finding this really useful so far, because I'm one of these, I just look at lines.
Yeah, and that works too. Whatever works for you, right?
Well, sometimes it works. Natty is a little,
Yeah.
I mean, because I remember I was watching the weekly chart, and this thing has gone pretty much straight down. Wish I'd caught the short. I was up. I got the original spike just, before, and I was like, yeah, I wish I'd caught the short, but I saw it coming careening down towards the 200 MA on the weekly. And I was like, you know what? It's not going to bounce when people think it's going to bounce. I know Natty. I have been trading Natty long enough. So I thought it would go below the 200 MA and then go pretty much, up, spike up, right? That's what I thought was going to happen. I just thought it wouldn't go as far as it did below the 200 MA. Like, why did it go so low? What happened?
Well, I think we had expiration of the March contract, and cash was a little bit reflecting this end of storage, end of year. Look, people aren't as worried right now. We were real worried last fall if we'd have enough.
Yeah.
Gas. We're real worried. And now we're not. Right now, we got to look ahead to the future. So, when the market gets like that, there's really nobody's coming to stand in, and so it overcorrects.
Yeah, that's what I think. I knew it would. I just that was real over. And let me ask you. I don't know if you're the right person to ask about this, but I've always thought, and I could be wrong, but my logic internally was that if something is a U.S. commodity and it's traded in U.S. dollars, then most likely it would bottom or top out during U.S. trading hours. Is that false logic, or is that just not? What do you think about that? Because so far, I remember I was long over the weekend, and then it went down another 2% overnight past the low of the U.S. market. And then that was the low so far has been overnight during European trading hours. And I was just curious.
Well, here's something you have to kind of remember with natural gas. It's very much linked to the power markets. It's one of the primary inputs for making electricity. And electricity markets are incredibly volatile. They trade 24/7, and things can change on a dime, based on a storm cloud or this or that intraday and in the very short term. And those things, of course, can happen outside of futures trading hours. ICE, I think, they go off at 6 at night and, come back on. So there are still, especially in the afternoon, as generators are shoring up for their next day. There's still a lot going on. And afternoon weather forecasts. And then, the European session rolls in, and we're a little bit connected to them now. We have a fixed amount of send out capacity, but that connects us to some of those price spikes in certain times of the year if there is particular demand for sending out. So of course it would, just like oil, right? As soon as they, Brent takes over and then Dubai, and the biggest moves sometimes are overnight.
Yeah, well, I definitely have noticed that there's huge moves in Natty in the morning. I think if I really was a morning person, I am not. But if I was a morning person, I feel like you could make a living trading Natty from 4 a.m. to 9 a.m. Eastern, because it feels like that's when all the weather comes out, I think. And then it's it seems to move it seems to be the most volatile, at least from my perspective.
Yeah, well, there's a contract. One of the biggest things that's traded in natural gas is called next day gas. It's the swing swap. And so that trades up until, I might get my time zones wrong here, but I'm going to say 11 a.m. for tomorrow. And then you switch over to the next day. So the morning is really when the power utilities are looking at what their load forecast, demand forecast is going to be for the next day. You know, they're trying to nominate and buy gas from people. So the morning is when you're really getting, not at 4 a.m., certainly not, but, you know, like 7 to 11 is when the real operational price discovery is coming in. And then that translates itself back through into futures because everything prices off of that. So that's always going to kind of shore up the fundamentals.
So I have had so many people send me copies of notices from their utility company saying, because of the rising cost of natural gas, we're going to have to pass that along to our customers. And these people are looking at their long natties and being like, what are you talking about? So I know it's linked to power. I know that power, maybe they're corrupt, but why is the price of natural gas going up on our utility bills when we can see that the price of natural gas is going down or has been going down?
The utilities were buying last summer. You remember how we talked about earlier, they buy throughout the summer,
right?
And dispatch it in the winter. Some, volatile periods in natural gas, there's a big, huge price difference between, summer and winter, but not as noticeable really as we saw this year. I mean, we were last fall, what did we get up to $14 or higher? I forget what
I don't even know.
And for a period of time, prices were elevated. They had to buy for storage. And so then they file their rate case for this winter, and the costs that they're passing along to you are what they paid. It makes, the retail consumer just bears the brunt of the timing of all that, right? And not like we say we could have timed it better. I don't know that I wanted to speculate on my natural gas, but really we'll see this year. We're starting at real low levels here. Are the storage buyers going to think, oh my gosh, this is like a gift. It's so much cheaper, easier to carry. It's harder for them to carry such high dollar inventory. It's expensive. We'll see if right here, these levels are going to look like a gift given what they went through last year. And we'll see earlier in the season, they trip over themselves to start buying now, and then we'll fizzle out at the end of the year or towards the end of the summer. But it's due to the timing of when, they're not buying necessarily in the spot market, your utility right there. They have it in storage and they've had to put contracts in place last year when it was expensive. It's really a glaring difference now.
Yeah. Okay. I have another question, and probably this is a dumb question. I don't mind asking the dumb question. It's okay. I was long over the weekend and somebody sent me something and just email. I was mad about it because it said something like, natural gas is going to go negative, blah, blah, blah. And I spent my whole weekend like, oh my God, is natural gas going to open negative? Am I going to be poor? Like
negative prices, or you mean just down on the day?
No, negative prices. Like the futures would go, like oil did, right? Because I got to tell you a story. I was long oil when it was at the very bottom, right? Because I thought I was a genius at that time, right? And I was like, I was like, this is stupid. It's not going to stay negative. That's dumb, right? That in my mind. But then my broker sent me something saying closing trades only. And then I got scared because I was like, because I was like, if there's only closing trades, then who's going to buy it? How is it going to go up? But I wasn't thinking rationally because I was so scared, because of what they said. And then I think I closed it with like $20 profit. I would be not here with you right now if I kept that position. I would be off on a beach. I would just be so happy. But
we all have those. But the thing is, That's why, speculating in flat price, the flat price futures when it's crazy like that.
So is it possible that natural gas futures can go negative?
First of all, I'll say we've already been negative in basis. So Waha contract I think they'll pass at least 2-3 years ago and a couple different times. The basis Waha, which is the spread between Waha, which is the Permian in Texas, and Henry Hub. It made Waha trade -$10, -20, -30. So it certainly happened. The NYMEX contract hasn't done that. And there's really no reason it should. We have room in storage. We're not overproducing. The situation that made oil go negative was the immediate shutdown of refiners. So they rejected the oil coming into it. It happened so quickly that people didn't have time to find homes for it. And just as soon as they did, it came back up.
Right. I remember thinking, put it in my swimming pool. I got room. You know what I mean?
Right. But you have to have that all in place and everything. Yeah. I guess a situation in gas could be you cut off all the utilities at once, so refiners take in oil, generators take in natural gas. I guess if you shut down all the power generators, I don't see that scenario. And I'm trying to get to the bottom of why that would happen. You could maybe say we ban exports.
Right.
And so all of a sudden this stuff is all caught here. I don't see any of those scenarios front and center. So I think that this is back to levels that we were before we started this whole thing. I think we're going to be doing some price discovery at some different levels here. We went from 14, we're all the way down. Like, what is it? It was 5 and then it's 3. Like, where's the place where we kind of really get some volume and some real deals being done?
Well, that's interesting. Because of the contract role, there is a gap lower in the 2s. Do you think it might get back to the 1 level? That's putting you on the spot a little bit. Nobody knows.
So if you look at the April through October curve, it's in contango. And, the April, May is what I'm looking at, like -12 cents, and May, June, -18, June, July, -17.5. So, and if you kind of look at those charts, those spreads have been, they've sold off kind of on the bottom and trying to find a little bit of support here. So I would look to see some support there first before maybe you'd think about wanting to call prices going higher or lower, or if they fall out of bed again. The thing is, that's a nice amount of money to store your gas, right? We want people to store gas. So, in a contango shape, people are willing to buy and store. So I think we are going to see some buying in here, but we have to go through, the end of March and April are really, really light demand months, unless you're kind of going to say, I really think, they're going to front run storage buyers early this year. This is just kind of testing out levels. I wouldn't say so we could, if these spreads fall out of bed again, that could be cash dragging it down. I don't just look at it like, could it go to that level? It could, but you need to watch the spreads. They're trying to bottom out a little bit. And that's a positive sign for the price level overall.
I think so too. For somebody listening, because I actually recommend not to trade natural gas only because it's so crazy. It's volatile. It's like when you look at it in hindsight, it seems as if it made sense. Like, oh, sure, I should have shorted there. But when it's happening, it just doesn't. It seems like it's just so volatile that it's hard, especially with the leverage involved in some of these ETFs and in the futures.
The real trade that happens in natural gas, and I think here's why maybe you're kind of steer some retail players away from that, is because a lot of the smarter trades, better risk rewards aren't available necessarily to the retail trader. And those are calendar spread options, basis trades, which is, the 150 basis locations that all price relative to the hub. And so it's easier to take a position on the spread between 2 locations than it is just on the overall price, right? And that dynamic is really what filters back into the one Henry Hub futures contract. So, these calendar spread options, the put spreads and the call spreads when your vol gets really high, and some of the calendar spreads are really more the professional way that people look at trading natural gas versus just an outright play on the direction of NYMEX futures. And I think there's so many other influences on it that you might not see, and that's where the complexity comes in.
We have a question from George. He asks, how will Freeport move the market assuming it's fully up? Is that about LNG?
Yeah, well, it's ironic or interesting that, Freeport went down last fall when prices were screaming, and it's managed to be offline during this entire winter season where prices were very vulnerable to the upside. And now here the prices are lower again. We're looking at bringing that back online. It certainly will add to the, daily competition for natural gas. I mean, it's not like half of their fleet was down, right? It's an incremental. I think it's 1 or 2 B a day. One, I might be wrong, but it will add another buyer into the market this summer. It's not a scary buyer, right? But it is something we didn't have this past winter. And now they will show up as everybody else is going to start buying for storage for next winter. The one thing to keep in mind is that if prices start getting too out of control, given what we just went through, people might not pay up, and they'll wait and wait and wait and wait again. So, you don't know if they're going to front load it this year or back end it, but certainly it's not bad news that it's coming online as far as, supportive.
By the way, George said that you were remarkable, and I agree with him. I am like listening to you talk. I'm like, wow, I hope I don't take up Brynne's entire day, like asking her questions, because I really just love the way that you think, and I'm learning a lot. But let me just switch it over to oil. So I have been shorting oil recently. Well, actually, so I shorted near the top at 123. And I just remember everybody's telling me I was crazy and that oil is fundamentally bullish and I was going to get run over and it's going to $250 or something like that. And I didn't keep it, of course, because I was, again, like, I get scared. Oil is also volatile. And I got a little like, I didn't know how far back it would pull. I just knew it would pull back. And I just look at shapes and lines. And right now, it seems like on the weekly, it's interesting because oil looks like it's making a bear pennant. I've said a couple times, I think it might go to the mid 60s. It's definitely possible. But every time it starts to break down, it comes back up. And so it's sort of just annoying to trade. If you're a swing trader, if you're a range trader, I'm sure you're making all sorts of money.
Yeah, it's
but like
nice range.
Yeah, really nice. It's true. Really nice range. You could be long and or short and make money on both sides of the trade, but it's just kind of consolidating on a weekly basis. And then what's interesting is XOP, which is, oil equities, is also consolidating, but it looks like more of a bull pennant on the weekly. So it's like, again, every time it looks like it's going to break down, it comes back up. But during this whole from the 123 area down, now we're in low 80s, high 70s, whatever. During that whole period, I have just heard over and over again from other macro people that oil is bullish. Everybody tells me it's bullish. Today, for the first time, I saw somebody say that it was fundamentally bearish. I'm like, okay, well, we could have turned a corner here. Maybe we need more people saying that, and then it goes up. But do you have an opinion you would like to share about what you think about oil at this stage, where it is right now?
The overlying dynamic has been this manipulation of supply by strategic petroleum reserves and by OPEC cutting and not cutting. So there's a lot going on, back and forth to try to keep prices where politicians can stomach them, right?
So funny you said, yes, I know. I agree. Like, if I don't pay any attention to anything except for what the politicians say, because for whatever reason, that's what seems to happen. Like,
well, inflation, right? I mean, energy is a nasty little thorn in their side right now, right? They want to, and they, really focused on, gasoline and oil prices. It was really easy the end of last year and the beginning of this year to make the case that we had drained so much SPR that that in and of itself was bullish. You know, we 100 plus million have come out, and that in and of itself, you know, merited or warranted this bullish overtone. Mm-hmm. The thing is, along that time period, and commercial inventories were pretty low as well. But since the beginning of this year, we've put almost 60 million barrels in commercial crude oil inventories and shored up product, and distillates are still a little bit behind. But if you look at it just from a commercial inventory point of view, as of last week's report, it looks comfortable, right? We're building. If that trends continue, Cushing is filling up. You know, it's flashing some signs of weakness from that standpoint. If you take commercial inventories all by themselves, then you kind of have this SPR world sitting out there, and you know, these mandatory sales that we have to make every year from the SPR. People at the beginning of the year thought that the administration, the White House, they would cancel those. And that didn't happen. And a couple of weeks ago, they announced that no, in fact, you know, they're going to go ahead and sell those 26 million barrels as mandated in previous years to sell every year. So now we've got that's going to kind of hit the market. I think it's April, May, or you can pull it, you know, go to the SPR website, but it's coming up in the next 3 months. So you have them saying that out of one side, and then out of the other side, they've said they're going to refill the SPR and buy these barrels back. Initially, they said below $100, then it was below 80. Now they've said they're going to buy it back from 67 to 72.
Oh,
and we've gone down and tested all these levels. I'm a skeptic. I don't think there's a big motivation for the DOE or, you know, White House to front run oil prices and try to, you know, step in front and drive them higher. I think they would like it if they had some sort of, you know, collapse. But you certainly have, you know, outside forces, you know, the OPECs and the Saudi Arabias and the Russia of the world, that they don't want to let them fall too far. So, you know, you kind of have that war game is happening out there. And that certainly makes you more worried about something that could happen on the upside, you know, because it is a volatile situation and we do have less reserves around than we had before.
Yeah.
But if you can let that sit over here and you look at the commercial part of it, the front few months continue to be in contango, and that keeps kind of rolling forward. And, you know, the first couple spreads are in contango. The overall curve is backwardated, but that we're building, we kind of got a lot, we're building a lot right now, and commercially is weighing on the market. It certainly could give us the impetus to go test, you know, that 67 to 72 range meaningfully. We certainly have higher risk premium global geopolitics from that standpoint, but that's not happening right now. And, you know, you got to keep that in mind when you're putting your trades on. And that's why a lot of people will just sell the spreads instead of sell just the futures, right? Because anything could happen, but the spread, you know, is going to maintain a little. And so you put a little more size on spreads than you would on flat price.
You're so smart. I love that. It's a way to protect yourself and still put your trade on and still make money. So I love that.
And a lot of them are predictable. I mean, like you can look at trading like, you know, the front 3 month fly. So if you chart the, you know, continuous front 3 month fly, you know, you can kind of pick your levels, and it's really the front spread has been collapsing relative to the next spread for quite a while. And so, you know, that's really where real money is trying to go to work, right? You know, manipulating themselves along the curve, lower risk. You can employ a little bit more capital and double your money on a trade, you know, moving a dime, right? On a spread.
Slurp. I always slurp when I hear good trades. Okay. I'm going to ask you another question from George. And that's with regards to oil. He's heard about people discussing that 30% of the barrels reported in the EIA, those reports, are actually NGLs versus oil. And he said, is that something underappreciated, or is it even true? I had not heard that.
Well, there is an NGL component to inventory, but what's included in just oil, you got to take it at that face value. It's just oil. I saw something and I wrote about it a little bit this weekend, and it's posted on my Twitter. Some people are trying to say, or speculating, that the EIA is over reporting barrels that are building in inventory. And the evidence that people use for that is there's an adjustment, there's a plug used every week. So you take production plus refiner inputs equals product supplied. I think that's a lot being made of nothing, but I recognize that there's some chatter going around out there about that, especially from bulls that are kind of thinking maybe the EIA is working against them. And I mean, given these days, it's easy to be skeptical.
Yeah, no, I mean, this is, thank you for addressing that. There's a lot of new traders out there. There's a lot of people who are interested in trading oil and natural gas. Your blog is clearly one of the resources that I think that they could get a lot of value from.
I'm director of research at Cornerstone Futures, and I post every Sunday a weekly analysis of primarily the oil and products side, but I tie in natural gas if when something's relevant. And so that's every Sunday night, and you can click the link on, I always pin it to the top of my Twitter page after I release it, and it'll take you to the Cornerstone Futures site. There's a whole library there, and I'm telling you what, it might be interesting for people to go back and read it. I've noticed that you can get to the first one, and then you have to put your email in to see my whole library. So, don't be scared by putting in the email, but it would let you read the body of work over the last several years. And, I think I'm pretty good at breaking it down, and it's certainly topical in the moment, talking about, Winter Storm Uri when it was happening, but there's things to be learned out of that, right? Because I put the curves with it, and I try to progress people through it. And what I tell people is, if you're reading it and you're like, I don't even know what that is. Well, good. Now you know where you gotta start,
where you know what you don't know, right?
I don't know it either, and the best way to learn it is
No, I appreciate that, and I think it's, for what in the world? Put in your email address, people. I remember too, when I was first starting trading, I would look at like tankers. I don't know what I was looking at, like a satellite image, and I was watching tankers. And I thought I thought it would help me in some way. I got to be honest, it did not, because I'm just like, you know what? I'm going to stick to lines, and whether it's above or below, and because
it's like if you were trading S&P futures and the only data point that you focused on was IBM's earnings and anything, payrolls, consumer prices. It's like as if the only thing you paid attention to was that, and you paid attention to it, and you're like, certainly it's a big company, everybody pays attention to it, but that's not the only thing. That's a good piece of information. It's especially a good piece of information if your job is to schedule crude oil and you're booking it on the ships, and you're wanting to track where your ship is going. It's certainly interesting if there is a problem. Remember when that Evergreen ship
it lodged in that canal?
Yeah. So, in that way, you're like, you might want to look at it to see, wow, are things backing up or not? But, beyond that, if it's not your job, if you want to add that indicator into your whole plethora, but don't, it's just like the storage report isn't the only thing, right? Weather isn't the only thing. It's why people look at all sorts of news all day long to trade S&P futures. Some people just look at the lines, but other people try to predict some of the fundamental pieces of it.
And you know what? I say that I am earmuffs, and for the most part, I really am. Like, I don't care what other people are doing. I'm happy when people make money. I just want to do my own thing, and that's it. But I really appreciate you as a resource, because we hadn't talked before. And now, after having spoken with you,
but not.
Yeah, right. I just think you're super cool. I like your dogs. You seem like a very sincere person who's also super smart. But I like now having your work as a resource for me. If I want to see everything summarized in a really cohesive and yet articulate way, and that I can look at it every Sunday night if I want to. I have just really enjoyed our conversation today, Brynne. I can't thank you enough for joining me.
Yeah, and if people want to send me questions on Twitter at Brynne K. Kelly.
Yeah, everybody follow at Brynne K. Kelly. She's one of the best, if not the best, energy traders that I know about. Follow me as well if you don't mind. That'd be great. And Cordova Trades, and then also at Place Your Trades as well. And everybody, I hope you have a wonderful week trading. And don't forget about the Vegas giveaway thing. And Brynne, thank you again so much. You are wonderful.
Thank you very much. Okay. Thank you for having me. Bye, everyone.
Bye, everybody.